Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me for today's video. Before we start, make sure to subscribe to our channel so you don't miss out on any future content. While you're there, give the video a like and make sure to leave a comment below with any questions you have or suggestions for the next video topic. Don't forget to check out our live stream right here on YouTube, and if you haven't already, click the notification bell icon to make sure you don't miss our next one. And maybe you're looking for a bit more action earlier in the day, like the New York Stock Exchange Open. Then you can check out the free 3-day trial on ssftg.com's homepage with a big green button. All right, so the topic for today, while we're going through our candle-by-candle analysis, is entry defense. All right, so starting off every day like we always do, we want to take a look at the bigger picture, see what's going on in the wider spectrum of things, right? Is the market going up, down, sideways? Obviously, the election stuff's still going on, so the markets are pretty volatile, but we're looking at another gap up, and it's not just another gap up, it's an outside gap up, way above the previous high of day again, and yesterday was already way up there. So it ended up being kind of like this big bull flag that broke out, and now we're opening way up here. Same thing that happens before when we're opening up this far to the upside. Buyers don't necessarily want to be the first ones to the party, not when they're gapping up that far. So a lot of traders will look backward a little bit and see, does anything line up with this area that I might want to look to maybe break out of or buy a breakout pullback or something along those lines. And realistically, if we go backward in time a little bit here, I drew that horizontal line on there. If we go back, we can see there's a lot of resistance up here. We've got a major swing high that happened at 34.9375. We've got another swing high that's floating around the 3500s, big psychological round number. And we also have the swing high up at 35.08. So there's obviously some stuff up here that may cause some problems. It's creating a zone of interest. And if the market wants to go higher, you've got there and then all the way up to the top and all of the other spots. So we want to see where's the market going if it wants to go higher. And if it wants to go lower, seeing where the price was looking down, we have support, which is down there. And we can go a little bit further forward here to give us more current price action. So if we look back at some of these other areas that could potentially give us some help or grief, we've got that previous swing high. There's another swing high in there, and it's hitting all of those zones right now. So those ones are kind of gone. There is a possibility of another swing high above the top. And if it pulls back, really we've got this kind of wide open gap down there that needs to be filled in. The unfilled gap, the actual gap, another one down there, etc. So there's several zones of support on the way down, especially right there. It looks really nice. 33.29 or so. And all of these areas, depending on how far the market wants to go, could give us something to play with. So we want to keep our eyes on those areas as it's getting closer and closer. But where we are right now, when we look at the gap higher, this gap up is kind of opening up right on top of resistance. There's a bunch of stuff here right now that could cause some issues. So although it is a really strong bull bar, it's a gap up and everything looks pretty strong to keep things going, it's going to be tough to want to be a buyer the first candle of the day. They do follow through with some really good bullish strength. And with that bullish strength to the upside, it kind of adds that little bit of extra conviction. And this is where the first part of our topic begins, entry defense, or entry, re-entry. What ends up happening is when you have these triggers, whether it's above or below, in this case, this one broke above a bull bar, assumably a lot of traders will be buying above that bull bar or waiting for that bull bar to trigger and buying a pullback. Whatever the case may be, that zone becomes a hot spot. There's a lot of orders that take place there. And when the market continues a little bit higher, scalpers start taking profit. You've got swing traders starting to feel a little bit better about the trade. Or maybe because it was the first candle of the day, and this is why this one is interesting, it's the first candle of the day, and not everybody wants to go full bore on the first candle. Who wants to drop? If you're a 10 contract trader on the micro, why drop all 10 right there when you can put in 2 and see if it wants to go a little bit further and then maybe add to a winning position rather than getting dumped on at the open. So a lot of traders probably didn't go in large size on that move, and they'll be looking for a re-entry. So that zone where they bought above that candle, if the market can pull back to that area, that becomes a hot spot because buyers want to re-enter into the trend, especially if they didn't take larger size. And if we go forward, we can see that pullback is almost perfect. It actually was perfect. It went one tick through it, so we know for sure that they got filled. It came back and held support at 34.9375 now that we've closed above it. It's adding a lot of context. Buyers have a good reason to try to keep things going. And to make it even better, that was a really weak bear bar. So follow through for the bears, that doesn't really prove anything. It's not going to make any seller on the planet want to sell underneath that. Nobody's looking at that thinking, yes, that's the candle that I wanted. That's just not going to happen. More than anything, buyers are just looking at thinking, well, the seller's failed. Maybe I'll just buy the close of this bear bar and jump on along for the ride. It's bullish, right? So we're keeping the trend going. 3,500's around the corner, so it still needs to be filled in. Once it starts getting up there, then we've got to be a little bit careful. We get a big continuation and they blow off through the 3,500s. And the important part here is that although it is kind of not the best bull bar in the world, it's still closed above 3,500. And we're starting to create that kind of momentum to the upside again. So with that movement to the upside, we're seeing continuation. Buyers who bought the bear bar, buyers who bought the second bar, buyers who bought the pullback on bar 3, maybe they bought the close of bar 3, whatever reason, they're being given a profit target now. And with that, we're seeing a big wick on the highs, which is kind of telling us, hey, buyers are taking profit up here. Might not want to be so aggressive on the gas pedal anymore, wait for a little bit more of a pullback. Buy something on the cheap, right? One of my favorite ways when you have a screaming strong market is buying traps below previous bars, especially when they go engulfing. Those can be phenomenal start of huge move type candles. So just little things that you want to look for. So in this case, buying below this bull bar, if it wicks down there early in the candle, might be a nice little trap that forms its way back up. We get another bull bar continuation, and now we're starting to see something we talked about a few days ago. We've got our candle gapping to the upside now, and that's projecting upside targets to keep our eyes on. Now, as far as the upside targets, let me see here. They've got a little bit to go, but it's right up there at 35.08 half. So it's just like a tick or two above the 35.08 anyway. I might as well just keep that same spot. Very strong bull bar, but now it's the strongest bull bar that we've had with all of these candles getting bigger and bigger and bigger, and it's closing at the top. It's essentially forcing everybody who is chasing the move to buy high, and that might work sometimes, but in this case, it's buying directly into resistance again. We've got the candle gap objectives, we've got 35.08 just above us. There's no room to get anything going if you're buying this bull bar. It's either you're already long looking for targets or you're kind of waiting. Because buying way up here, that's just a chase. The one good thing that we are seeing is that the market is making highs, right? We made a new high and we saw the volume increase. So we know that there were some buyers who took profit there. Otherwise, that volume wouldn't have gone up. The next time it broke to a new high, there was less volume. So it's still looking okay for the bulls. We just kind of have to keep an eye on what they're going to do here. And buyers will still be looking to buy below the previous bull bar. Fill in some of that candle gap. That would be a really nice area for buyers to fade back into, right around that psychological 3,500. Okay, one giant bear bar straight into it, and ask and you shall receive. Gigantic bear bar down, and notice one very important thing here. This is what makes this super, super interesting, because we had this huge bear bar, right? This is a no joke, but it's a bear engulfing candle. Nobody is questioning, wait, I wonder if that bar was bearish. It obviously is, but look at the underlying volume under this. All of that movement down and nothing happened, right? Now, that could be one of two things. This is either A, the start of a huge move to the downside because it barely took any effort to get that big of a move. Chances are, if they can follow through, it's going to collapse. So if the bears can follow up another bear bar that's pretty heavy, that could be a top of day, morning reversal back down all the way to potentially even fill the gap. Or it's going to be a massive trap. It gets people stuck in the shorts. Buyers are looking to backfill this gap, and they're looking to buy on a dip. They don't want to buy the high. We were just talking about that. They want to buy cheap, and this might be a very favorable washout for them to come in on. So one of two scenarios here, and either one of them is going to be aggressive. Knowing that, if you're willing, some traders are more risky and some traders aren't. There's even opportunities around the close of the bear bar just to look for it to bounce back up or continue down for a quick snap move. Either way, not expecting it to stick around here for very long before we get a little bit more movement one way or the other. Nice bull bar right back up again, and now you can kind of see it's looking a little bit like a flag. Right? We've got a little bit of a flag pullback, and we've got the flagpole working its way up. This is a beautiful inside bull bar, basically. I mean, it did kind of make a new low. kind of, sort of, like a one tick low on the S&P during high volatility elections. Take it how you will, but I guess technically it made a new low and turned back up, and that's a really strong bull bar. So this is the scenario that we were looking for. It's either or, and if sellers were winning, that's not the candle. That's not what it looks like if sellers are winning the fight. That's sellers losing the fight. So if it starts triggering above this bull bar, then chances are we're going to see any sellers who did take that aggressive move, they're going to be jumping ship. And any buyers who see that weakness are also going to be jumping on board to try to ride this thing out of port and get that thing rallying back above 35.08 and finish off those objectives. So really strong bull bar, and notice what's happening. We're seeing volume increasing, and we're seeing prices move back up. That could tell us that we've got a little bit of buyers taking profit, which if buyers bought the washout, it kind of makes sense given this big bull bar. We need to see what the follow through is. Nice continued bull bar to the upside. We see volume increasing once again. Really strong bull bar, which is great. And they were able to close above 35.08 and kind of keep an eye on things. Now, going back to the mindset of entry defense, we know that shorts will have entered in underneath this bear bar. Well, they're stuck right now. So if the market at any point comes back to that area, that's going to be a zone of interest that we can highlight and keep our eyes on because we know that they're stuck from there. Bulls have a really good context to the upside with a trap underneath the lows, but we are seeing volume increasing again. So buyers who bought the washout are probably still taking profit. We might get a little bit of a pullback. Now, we get another continuation to the upside, and this is creating more candle gapping. So we've got candle gapping objectives now. We are already completed a candle gap, and as soon as we completed it, we got another one. That leaves objectives to the upside more around 35.17. So this has a lot of potential now. Now, all of a sudden, this is looking like it's trying to get a screaming move to the upside to get things going. If I can find my template here, geez, oh Pete. 1-to-1, there we go. So for the upside momentum, what buyers are looking for, pretty straightforward, right? They're looking for that 1-to-1 closure of the candle gap, and that's at 35.1775. So as long as this keeps going, we've got candle gapping, we've got three really strong bull bars, we've got bears that are stuck underneath that previous bear bar, and now, talking on entry defense, we have bulls that could have potentially bought above this bull bar who will be looking to reload if it comes back. Watching those previous entry points can give us a lot of clues. And it just jumps straight up into the target. Now, that did create more candle gapping, but realistically, the gapping that would have happened between here and here has already been filled. That's done. Now, this is what I like to call an overextension. This is icing on the cake. Buyers were expecting to go to like 35, 15, 16s. It went all the way up to 20. Here's an extra couple points for free. Congratulations, right? So a lot of people take the profit off the table. It's a little bit of that extra icing on the cake, and you see a pullback. Along with that, we have a morning brief resistance level at 35.2075, along with candle gapping objectives being filled, sellers trapped, and now a big blow off on the top with more volume going higher, more profit taking. We're not seeing any signs that the bulls are looking for continuation. They just keep hitting the highs and taking more profit. Really small little bear bar. And that little tiny bear bar, that is one that, although it's probably not the best kind of market to be looking to short in, the candle is so small and it's in such a nice stacked up area of interest that sellers will still take it because they know that their risk reward is so good. They can short underneath that bear bar with a stop just above the highs. And if they're wrong, they lose a couple points. If they're right, it's potentially 15 to 20 points. So the reward is massive, and a lot of traders will take that risk for, well, understandable reasons. They're looking for a bear breakdown. We see a new high being made and a bear bar down, but now volume's coming off again. There's a little bit less interest up on this move higher after that blow off. That's another clue that potentially a lot of the profit taking already happened. That was on that candle before us. Nobody's interested anymore up here. The volume would have kept going higher while they were taking profit. That's another cause for concern that could push this back down a little bit. We get a big pullback, and that's starting to look a lot more like a twin reversal now. Twin reversal in the sense that we've got this move up. If you were to flip that around and make it bearish, it's basically that candle. It moved up and then moved down with equal force. That's a very bearish indication. And a lot of sellers will be looking to sell that move down. Now remember, the big key to this is that sellers have already sold off of 35.20 if they were selling anything. That was that morning brief resistance, all of those levels stacking up. That's where the shorts are. That's where the buyers took profit. That's where sellers and selling took place. So this big bear bar down, there's probably, given the strength to the upside, going to be a lot of traders who are looking at this thinking, well, I know that's a possible bear move down, but maybe it's better to wait to see what the follow through is, right? I want to see, can they follow it through? Because this big drive down is accompanied by some of the biggest volume they've seen all day. That's a lot of profit taking, or that's potentially a lot of new buyers coming in on this big pullback. It's the first time the market's pulled back for them. So looking at that, you got to keep in mind, what's the response to this? Okay, we have a big failure off the highs, but what does the market do with that information? Nothing. The sellers accomplished not a thing. We have a big gap, right? They have a candle gap to the downside that might be looking for closure. But it's a weak bull bar, and for the same reason that we had sellers selling here, buyers will also buy here because they can put their stop close and their targets far. So they've got a chance to try to take the market farther back up. The one caveat to that being they're buying against a candle gap going to the downside. You're putting yourself on the back foot doing that. So it's not the best one in the world, but there may be some buyers there if they have some good follow through. They don't follow through at all, and then they fail back down into another bear bar. Now what that did effectively was close up the gap, but it didn't completely fill it, right? They closed it in. The big difference here, though, is that if we measure the candle gap like we normally would, all of those objectives are done now. So that little pop higher may not look like that big of a deal, and it might even look pretty bearish, but that brought all of the targets that were floating down here, that just snapped them right up to where the current market is. And because of that, all of those shorts that were holding the market down just became switched, right? Now they're starting to think, well, maybe I need to get out of this, start taking some profit, maybe getting out, and we can see volume is increasing again while the market is trying to pressure back lower. That's a good sign that we're seeing more of that profit taking again. Actually, no follow through. The bears didn't even trigger underneath that bear bar, and the bulls took it right back up again. Now, this is interesting because the bears, had they triggered in, we probably would have seen a big bump in volume. But this bull bar went right back up, and nobody got triggered in. So there's not really a whole lot of interest. Buyers are still kind of waiting to see, well, okay, what happens, right? There might be falling resistance here. There's a few things that might be coming in the way. We've got to break above that in order to get away from some of this gross resistance. And that twin reversal off the top is really nasty. And the longer it takes for the market to get back up, the weaker it is. So it's really got to start moving here. We finally close above that area, and buyers will be looking for a continuation push, and they're going to be looking to buy above this zone. Now, notice one other thing, one caveat. Where are we? Back to the entry point. Remember the shorts who sold the highs? May not be the best place in the world, but I've got to be careful buying too close to that. There's a potential for resistance there. Got a nice little wedge formation, and if they pop higher, that area could hold down the markets a little bit. You might see more wicking on the top of a bull bar if it does still go up. It could cause some problems. So it doesn't mean you can't buy, but it means expect it not to be the easiest thing in the world, right? We get a little bit more continuation to the upside, and also notably, if we look at entry defense, we can see the buyers kind of re-defending. We had that initial move higher. We had a kind of a weak bull bar, kind of a non-issue. Okay, do I really want to buy that candle? The bears just had a really bearish one. That's probably a trap. Oh, well, now we're closing above falling resistance. Okay, maybe I do want to be a buyer here, but oh, wait, I've got resistance here. I can't be a buyer there. There's no room for the trade to work. We're still triggering higher, but maybe I can buy back on that earlier entry point. That way, the risk can go underneath the lows and the targets will go back up there, and it's more like a one-to-one style trade. It fits better. So a lot of buyers will be looking to backfill that entry point to try to get a secondary pop to the upside. And you'll see this through the day often, a lot. Very frequently, it's just you'll see it inside the wicks. And sure enough, they pull back, they tap the lows, they refill, and they try to go back higher. So if buyers did get in above that weak bull bar, or they bought the second bull bar, or they were waiting and now they've got this candle, either way, they're looking for a break higher. The big problem, we still have that earlier seller's entry point looming above. It hasn't hit it yet. It's still just kind of hanging there, ominously above the top. So if the buyers are going to take it, they need to break out fast. And if they're not going to break out fast, the buyers will probably jump ship and look for deeper prices. We'll probably get a two-legged correction back to the moving average, something like that. Oy, terrible follow through to the upside. And any buyers who did take that long, they're not going to stick around to see what happens next. A lot of buyers are going to start jumping ship underneath this bar because they just don't want to risk it anymore. Now there's a very good likelihood that it pulls back to the moving average and starts getting some better pricing. And now we're going into 11 o'clock. And we can see, oh, there's the moving average. And now they're starting to chunk through it a little bit. And notice what's not happening. I know we haven't done the context all the way up to the current market, but really, the buyers aren't winning anything. They keep trying and trying and trying to take it higher, and they keep failing over and over and over again. They're not getting anything going, and as long as they continue to fail, it may be a really bullish day right now, but they don't have the context. We've got to see them break new highs, higher lows, higher highs, give us some actual physical, obvious evidence that the buyers want to take back over. And until that happens, we just don't have the trend shift yet. The bears are in control, and the best that we can really hope for now is a range out of this, which is kind of looking like what it's going to go for. We'll have to wait and see. Election stuff can throw these things all over the place, but either way, that'll do it. Hopefully you found it useful, interesting, entertaining, and something that you can use in your tool belt. If you have any questions, don't forget to send an email to jhb@ssftg.com. Till the next one, enjoy, rest up, and we will see you all then. Thanks.